countdown. I'm a little late. But you know what? Come on. It's Monday. Who's not late to work on Monday? Who's not late to work on Monday? Have at it. Valentine's Day sale. Morning, Wendy. Pin message. Maybe I'll actually turn on my Do Not Disturb. Maybe I'll actually turn on the actual show here. I got 2 cameras today, but I'm not gonna use them. Hopes and fears. Okay, did the software update that through? I don't know. Let's check. Okay, it's up to date. Whoop, whoop. Whoop, whoop. Morning, Jennifer. Morning, Harold. Let me go see. I've got this one. And then I've got this one. I've got, let me see. Oh. I guess that one's not. How's that one not? Okay, we're going to turn that off. I've got, I guess, here. That's a new camera angle that I'm trying to work in. Thanks, Jolene. Jolene Bobkovas. Jolene, let me do my Larry. My Dolly Parton. Jolene. Annual TV contracts are overrated. Reactivate your YouTube TV now. No, ma'am or sir. I will stick to having having my cheater box. I do have I've if anybody's interested, let me know. I have a box that gives me all the TV stations. By the way, just if you're wondering where the markets are, I mean, again, we had that nice rebound on Friday, which was legendary. I mean, just legendary. But I mean, we're in this range. This is kind of a decent range to be in. And that green bar, that green trend line, I mean, it's just exactly. Last week was down 1.4%. Were you down 1.4%? Were you up 1.4%? There is quite a difference depending on what you hold. So, and my desk is a freaking mess. Good God. Okay, today, cleanup day. I do have to say, office hours tomorrow will be later in the day, if at all. But I will be live with Trendspider at 4 p.m. on their Twitter, YouTube, and any other channel they broadcast to. Ooh, man. Oof. By the way, Friday's show, I mean, let's go to Spotfiy. Because Friday's show, if we just go and look at it, this one, we won't, tons of comments about how the show's great. People have made lots of money. Maybe I'll just keep this up. Yeah, maybe. Let's open up what I'm going to talk about today. We will end the podcast. There was a comment about how great the ending of Friday's podcast was. It was a section that I almost forgot to put in. We will be kind of flipping things around because we're kind of going to go over at the end what to expect this week. Let me see. I think it's just you, Larry.
A section that I almost forgot to put in.
I think it's just you. I can hear myself.
At the end, what to expect this week?
Yeah, I can hear it. Earnings are going really well. Catalyst watch. And this is why, you know what's funny? I know YouTube, and I read an article about this from a creator, Bill Simmons, who has a big podcast, who moved from YouTube to Netflix, and Netflix is doing a big push on podcasts. They have not reached out to me yet. I doubt Netflix will reach out to me. But Bill Simmons said, was asked about moving from YouTube to Netflix. It's a bold. I mean, Netflix caters to you and goes, "Ooh, we want you." YouTube is pretty much like, you should be lucky. You should be thankful that you're on this platform. You're able to be on this platform. I mean, that's the difference between how YouTube. I don't have a big YouTube audience, and I would never assume that they would reach out to me. But I do know some people with fairly large YouTube channels, we're talking millions, who have never heard from YouTube. Never heard, not once has YouTube reached out to them to say anything. And it's not like, a million subscribers. They probably have, millions of people around the world that have millions of subscribers. But come on. I mean, you've got a team of employees that all their job is to do is to run ads and do that. Have somebody reach out to somebody who's making you millions of dollars. I mean, that's what I would, if I were running YouTube. Hey, let's focus not just on the, not just on this stuff, but okay, there we go. And we're going to move that over here. Okay. And we'll go back to the 4 hour. Let's see. I mean, just Apple's down a little bit. It hit 280 on Friday. It did. Hood is up 2.93%. Kind of making that turnaround. This is one, I'll go over this one kind of in depth, but I mean, let's just put a horizontal line in there at, where is it? Right here. It is $85. I mean, honest to God, that might be the buy below, sell above line. It goes all the way back to the IPO. And it's up, again, 2.39% today. Palantir's up 1.35. They got a bid off of this low right here. It looks like 128. Again, if you're into Palantir and you want to get into Palantir, and you're waiting for it to get to 121, don't wait until it gets to 121, because there are plenty of little lines here where you had resistance. So the MACD below the oscillator, the RSI at 33 on the 4-hour. You go to the weekly, and this is the first time that the MACD has been below 50 since December 2022 when it was selling for $8. I mean, that's, you want an oversold stock, you got an oversold stock. Roblox killing it. And the MACD still below the RSI. It was up crazy on Friday. And you go and look at the weekly, and it's totally oversold. I mean, is this the Peloton? You know, is this the Peloton of now? It's an interesting one. So, and you got Exxon all-time highs and continuing higher. I mean, again, we can just move this one up. So far, the 4-hour algorithm has made you 27%. So, and VOO, I don't have horizontal lines on. I don't worry about my VOO. But when you look at the daily, we're not even close to the 200-day, but the 200-day is still moving positive. Now, you go back to last year at this time, it was still moving positive, and we came down from February until March. It took that long to get down. And this was a painful time. So, yeah. Okay. I'm going to start recording now. I'm not going to do the second camera angle today. The second camera angle set up. I'll show it to you. It's on this. I don't know where it is, though. It's somewhere on this screen, but I can't see it. We're going to hide it from there. But it is here. And you can see it. Second camera angle. I can go over here and talk to you. I think it makes it for more interaction. So, more personal. I constantly, you know, I was listening to this My First Millions podcast, and they were talking about successful, like, billionaire people who have built businesses. And I do consider this podcast a business. It is my business. So I have built it. I could walk away from it. I would be perfectly happy if I no longer enjoy doing it to walk away from it, but I do. And they were talking about how billionaire founders and billionaire and smart people and things like that, they really like every aspect of the business is, and I'm constantly like, okay, I should do this. Okay, like for instance, one of the things that I'm working on right now, morning Donovan, is when you sign up for the newsletter. So if you sign up for the paid newsletter, I'm currently writing a journal template for some folks. That's the number one thing that people ask is about journaling and stuff. So, let me see VRT. It did get you out. Hasn't gotten you back in. But boy, I mean, that's been a good trade. It's been a couple of days, but it just right along that 200-day. If you can buy right along that 200-day on this one, VRT. The earnings are coming up this week. This is one that I've got my eye on. They are, let's see, February 11th in pre-market. So Wednesday. Ondas. That's the drone company, I think. I don't own that one, but I do have it on a watch list. I think I have it on a watch list. More a vacation guy. I have it on a watch list, I think, somewhere. This Best of Us Investors, this one was up freaking 6%. I mean, Alpha Pix was up 6%. You had Mara up 22%. You had CoreWeave up 20%. Galaxy Digital was up 17%. But, I mean, year to date, since he published that video, he's down 11%. So, But, you know, he had said this was for the year. Microsoft at $400. I mean, come on. Microsoft at $400 is just, it's 20. I mean, let's just look at the PE, the historical PE. Let's select metrics. Valuation, we'll go to the PE, trailing 12 months PE. We're going to get out the price return. And we're going to get rid of that. I mean, look at that. I mean, 5 years, you're the last time the PE was at this, okay? It was 11/2/22. 11/2/22. I mean, let's just go. Let's see. The 22nd of November was the low. You're $240. Yeah. I like Credo. We'll go over Credo. I got a whole Credo thing going on today. Timeline. Okay. Let me hit record. Get QQQ up. Okay, I'll hit record. Good morning. It is Monday, February 9th. I do have to say, this is sponsored by Seeking Alpha, so let's go over to a different first screen. We'll go over to this where it says Seeking Alpha, sponsored by Seeking Alpha. The disclaimer: the content is for educational and entertainment purposes only. It does not constitute financial advice and does not represent the views of Seeking Alpha. Links above or below include affiliate links, which means I may get compensation such as an affiliate commission if you sign up or purchase through the links provided. Past performance is no guarantee of future results. Any investment carries a potential for loss. So today we're going to go over how I use Seeking Alpha to find picks. I will give you one that I gave everybody, not behind a paywall, everybody last week. Up 26%, somewhere in the neighborhood of that, 15%, somewhere in the neighborhood of that. We'll tell you a couple of people who have paid for their yearly subscriptions just through a couple of picks just last week. We'll go through we'll pay homage to Sidekick here in Trendspider. We will, because Sidekick and Trendspider together, it's perfect together, the power of the tools. Alpha Picks, we will go over Alpha Picks because I am underperforming the Alpha Picks portfolio. But am I beating the S&P? We'll go over the actual performance. We'll go over memory, bottleneck. We'll go over NVIDIA and the AI trade. We will put, there's a stock that if it pulls back just 5% or more, and I may just go in and buy today, to be honest with you. We will go over one that I love that much. The Dow hits 50,000 for the first time in history. Let's look at the Dow stocks that are driving this. Top 2026 stocks, we'll look at that because you should be buying the dip. Robinhood, they report this week. I'll go into depth on that one. The week ahead, and the reason you want to hold gold. So let's go into, we're looking at QQQ, okay? The MACD, if you don't know, the MACD, moving average, convergence, divergence, my favorite indicator, below the oscillator. The RSI on Thursday on the 4-hour got down to 31. This one was up, 2% on Friday? Did you buy the dip? I didn't buy the dip. I bought a couple of things, but I didn't buy this dip. Remember last week when I said there was a new stock in the when I went over to Seeking Alpha, and I said there's a new stock in this list, okay? It was Love, and it was LUV, and I have the note in here on 2/2, okay? That was 7 days ago. Found as a top quant stock at 47. Where are you today? 54, okay? Don't say this is just an ad. You're welcome for the 15% so far. That's as simple as it is. Maybe you could have paid for your annual Trendspider and Seeking Alpha bundle subscription. For those with Seeking Alpha, as they're, they already have a subscription, there's a completely new stock at the top of the small caps. I found it interesting. Year to date, it's up 26%. Again, if you have a subscription, if you don't worry. You can get either the bundle okay, where you save over $150, or even better, the Valentine's Day gets you a free 7-day trial. There were 2 people last week in the comment section, okay, down here on Spotify, in the comment section on Spotify, that paid for their subscriptions, one with PSIX, another one with CRDO. We will go over CRDO in a little bit. Another one with APLD at 25 exploded up since I announced it in December that it was a strong buy. I'll bring up another one later, again, that I want to buy right now that's up 52% in just 1 month, and it's a strong buy. It's at the top of the list. But if you don't have Seeking Alpha, okay, go and watch this. 5 ways Seeking Alpha helps me beat the market. It is at the Daily Stock Pick podcast, dailystockpick.substack.com. And it's right here. 5 ways Seeking Alpha helps me beat the market. Go and watch the video. It is very simple. And then you go to Linktree, linktr.ee. Literally, the link is down below. It's in letters below me. And you can choose premium and alpha picks. Excuse me. You can get alpha picks by itself, which, by the way, you're getting an additional savings, $424 a year. Or you can get Pro, or you can get just Seeking Alpha by itself, or the bundle. Again, all the options are on Linktree, so go and investigate. But not only do you get, but by the way, when you get Seeking Alpha, you get the top 2026 stocks, which we will go over. And just in case you wanted to know the benefit, okay, of Seeking Alpha versus some other things, here is Morningstar's top-rated AI names, 4 to 5 stocks with real upside. This is Morningstar. This is the competition, okay? Adobe. Let's go and look at Adobe. Because is Adobe one that you want to put your money into? Because look at this. It is still sinking. And if we go to Seeking Alpha and we look at Adobe, does it tell you to get into it? It says no, hold. It says no, hold. Why? Well, mainly, you could probably just go up here and look at this Adobe description, and you can find out why. The valuation presents a mixed picture. Growth metrics are mixed. Adobe showcases exceptional profitability with net margins, but again, with their growth, are they growing? And momentum, it's weak. Revisions presents a balanced scenario with 18 up and 17 down. It's not the best in the market. And if you want to know what is the best, you go over here and you look at BILL as the top one. That is a solid one. It's a strong buy. Wall Street, 17% upside. So again, simple as that. Do you want to buy Oracle? Let's look at the chart of Oracle. Because Morningstar says, hey, it's a great one. Look at this. It's a falling knife. Not to talk bad. I used Morningstar for many, many times. But the difference is that Steve's AI picks that he picked out on Friday, okay, last week, look far better to me than catching falling knives like Adobe and Oracle. This list, in my opinion, is buy a falling knife and hope that they recover. Now, there are some good names on here like NVIDIA, like Taiwan Semi, like Meta, like Microsoft. But for the most part, this is just a slot pick where you have Adobe and Oracle. And if you didn't know, okay, let's pay homage to last week. This is how you use the tools. CRDO, okay? CRDO. This is from Trendspider, which is another tool that I use. And CRDO, we had it do an analysis of CRDO. I literally said, can you do a full Wall Street style analysis of CRDO before the earnings? What price should I pay? Okay. January 22nd. Let's just go and look at this because CRDO, what did I notice? Well, it's a top 2025 stock. On January 22nd, I got this exit for a 1.82% gain. As a top 2025 stocks, that was up quite a bit. You can see on a weekly chart, we've still got huge momentum with the 200-day, the 50-day, all of the momentum moving. But on January 22nd, I said, maybe I should trim right here. Or maybe I should buy, because the difference between this 146 and 134, not that much. I could buy it and then wait for the bounce up to 177. I trimmed it. But I had set up an alert to buy more when it was down 20%. Okay, it's down 20% from its highs at this point. So I wanted to buy more, clear range. Then January 23rd, CRDO, I was thinking of buying more. I said, maybe I just want it. And so I went into Sidekick and I said, hey, do a Wall Street style analysis. And again, this is all documented. It is not something that I'm putting behind a paywall. It's all documented. Sidekick gave me a signal, said, do not buy. Hold it. Wait for a pullback. Trim your position at 133. Wait for the stock to get under 100. Okay? Wait for this, and I'll repeat that. Wait for the stock to get under 100. And what did we see last week? We saw it get under 100. Okay? February 4th, the stop dips under 100 with a low of 95. February 7th, which was Friday, the stock explodes up 17%, up 13%. 17% is from where you bought it under 100 because you bought it on February 4th. The power of the tools. And Seeking Alpha, again, you can get a free 7-day trial. Throw your portfolio in there. See how good it's doing. Get Alpha Picks because we're getting a new one on the 15th. Get the bundle and save even more. Again, right here. Put it together with Trendspider and you've got yourself a powerhouse tool set. Okay? Again, what do we have? Now let's go and look at Alpha Picks. Okay? Alpha Picks is a data-driven portfolio. And I can't give you the portfolio, but you can go to get it. But let me just review some things if you're listening. You don't need to look at the screen for this. We had 20 stocks in an Alpha Picks portfolio that were up 5% or more just on Friday. 20 stocks. That's how explosive Friday was. My personal Alpha Picks portfolio was up 5.3% on Friday alone. My performance? Let's go over it because my return on Alpha Picks so far this year, 3 months, my return 5.63%. Alpha Picks 10.16. I am having Alpha Picks, but let's throw in 3 months of S&P. It's up 3%. So what did I do wrong? Well, I'm overweight one of the Alpha Picks that is not doing well. It's APLD. Look at that 3 months. You go back to October and you're at 700. Today, you're at 400. My return, again, I'm overweight in this one. Risk, reward. I was fine taking the risk up here in the 600s, up here in the 500s, but it's not rewarding me in the short term. Year to date, my return, 6.13. Alpha Picks, 9.79. Am I okay with underperforming by 3%? Yes, the S&P is up 1.27. Again, this has a lot to do with APLD. Overall, I am happy with my performance. I am outpacing the S&P. That's what this portfolio helps you do. Oh, I didn't get, let me see. Oh, why didn't I get this? Oh, I missed it. I'll have to go and find it. But again, it's Alpha Picks. Alpha Picks, the bundle is what I recommend, but it's Alpha Picks. Overall, I'm happy with my performance. The difference in my portfolio, is it worth the $424? Let me just do this. This is very unprofessional of me, but I need to sign out and then go over here and I'll click on Alpha Picks and you can see 82% between 301% for Alpha Picks. Is this worth $424? Because again, it's on sale. It's usually $449. Is this worth it? Well, I would say you'd need to outpace the S&P by 4% if you have $10,000 in alpha picks. And then it pays itself back. Again, it pays itself back if you outpace it by 4%. I just went over that I'm outpacing the S&P by 6% in January alone, just year to date. Okay? But I have tens of thousands of dollars, or I'm sorry, hundreds of thousands of dollars. I have somewhere it's close to, it's mid six figures into this portfolio. I have made more from this portfolio in just a week than what it costs. That's my personal experience. And so many others in the audience have the same exact experience. Since it worked now for me for a few years, yes, I'm recommending it to others. And what do I recommend? I recommend the bundle. Why? You'll see as we go along. But let's just go over a couple of stocks, okay? A couple of stocks that are really, really good, that are in alpha picks, that are outpacing. First one, the top performer, CLS. CLS has a closed portion of their position that returned 1,166%. It is a fantastic, the largest position with the initial buy. And then another one, APP, AppLovin. Again, this one, AppLovin, has returned 1,571%. Just those stocks alone, getting in back early in 2023, have paid for years of this portfolio. Look at a 5-year chart of AppLovin. 5 years? I don't even think it goes back 5 years, but you were trading back here at 58 and you got all the way to 700. Just those stocks alone. You had a pick from October that's currently up 106%. 2 picks from 2024 that are currently in the portfolio up over 200%. Remember, the S&P is only expected to get 100% every 7 to 8 years. So let's say you believe, you trust Cathie Woods and you say, well, ARKK. We'll just look at ARKK. Because Cathie Wood says, hey, don't invest in the S&P. I can double your money every 5 years. What have you done in 5 years? You've lost 54%. Know what you own, and you're paying, I think it's point. Yeah, they do have, let's see, the expenses. I think the expenses are like 0.05, something like that. You're overpaying. Know what you own. Her 5-year return is horrible, so know what you own. She is one, the Quant says strong sell this one. And what should you own? Well, I listened to a podcast this weekend on The Verge. Okay, it's about Steam Deck. And if you don't know Steam Deck is a gaming platform. It's a gaming platform that's highly anticipated. It literally said they can announce pricing for the gaming platform or any product because of issues with memory. The CEO of Razer, which is a PC maker, he said at CES, they can't announce pricing for any of their new laptops because they don't know what the price of the memory is going to be. Okay? So I went down here, and this was a while ago. I went down here to comparisons, and I said, well, let me find my memory name that might be the best option. And remember, just talking about Sidekick. This, by the way, is STX, WDC, SanDisk, and Pure Storage. Well, remember when I went into last week, Sidekick, and I said, hey, before earnings for Micron, I said, I analyzed Micron as a top 2026 stock. This was January 6th. So, again, if you want to look at Micron, if you want to look at memory storage, technology daily, again, I had it rank all of the names to SNDK, WDC, STK, and MU. I had it rank them. Again, I'm using the tools that I have. And Micron was a buyback here. I had it do the analysis. I bought on the 4-hour algorithm. I bought it on the 4-hour algorithm at 265. Could have paid for the entire year of Trendspider. So let's go over NVIDIA and the AI trade. Because NVIDIA, if you didn't know, Jensen Huang, who's the CEO of NVIDIA, he was on a halftime report. And he said a couple of things. He said demand for chips is through the roof. And the chips they sold 6 years ago are still going up in price based on demand, like wine. Technology doesn't go up like wine. Technology degrades. It gets cheaper. Well, his tech hasn't gotten cheaper. What does that signal for NVIDIA earnings that are coming up in February, late in February? The stock has been stuck around 180 to 190. Do they have another blowout quarter? Is this one cheap? Is NVIDIA cheap? I won't answer that question. I own a lot of NVIDIA. Yes, I've been trimming NVIDIA as it gets around that 190 mark. And that's just been my thing. I am trimming back, taking profits. He also mentioned nobody uses AI better than Meta. Does that bode well for Meta? Is that a something that, oh my God, I've got to go out there and buy Meta? Well, I'm not buying Meta until it gets down towards 600. Then I'm buying it and I'm trimming up at that 740. So Meta, in my mind, is not the best buy in the market. Is a good one to trade? Absolutely. Meta, Wall Street says it's an $859 target. That's a 30% upside. The valuation is crazy. And when you go to their profitability, it's really good. But they will only have $9 billion in free cash flow. And that's the problem. They're spending too much. That makes me want to own the stock, but not a huge amount of it. I'll wait for the price, which is the chart, to show me where it's going. Once it gets over that $700 mark and holds the 740, I will be happy to add even more. But until then, I won't. So let's talk about stocks that I do want to add to. One of them, Lumentums, okay? I listened to the CEO of Lite, it's L-I-T-E is the symbol, on Friday on CNBC. I was super impressed. L-I-T-E is the symbol. Super impressed. Now, we're talking about a stock that is already up. If we go and look at the quant on it, this was a strong buy. It's still a strong buy. It is a 4.99 out of 5 in Seeking Alpha's quant. Okay, it's been that way for quite a while. The first time it showed up as 4.99 was way back somewhere around $140. You're trading at 551. Again, the power of the quant. Why do I like this one so much? Well, I'm a fan of CRDO. CRDO is one that I've looked into. Okay, if you don't know what CRDO is, they basically provide the copper cords that link all of these chips in data centers together, and they're a proprietary purple cords. So when you saw purple cords, it was like, oh my God, this is the somebody that uses CRDO. Well, CRDO, if you didn't remember, Udom Day did this great. Lumentum's AI optics business got a major boost. This was published, let's see, January 27th. January 27th, he published this one, and he goes into this. He also published an article on why he was selling CRDO, and they go together. Okay? I thought LITE was just a Google play, that it was just in the ecosystem. But it turns out they make what's called photonics. Okay, photonics are basically light. And instead of using copper, which CRDO uses, Light uses photonics, and they're the #1 provider of those photonic cables. Again, it's hardware. It is actual product that you hold in your hand. It's not software. I like this one. Sidekick played CRDO so perfectly. And if you remember, Udom did a great one. If you go and look at his analysis, AI and CRDO technology, copper cables are breaking up. That's what he put in there. And he makes the play that, hey, copper is yesterday. And here on January 27th, he's saying buy Lumentums. I'm not in this world. I like it. For paid subscribers, what am I going to do tomorrow during office hours? I am going to take light and I am going to go into Sidekick just like it did for CRDO. I am going to say, hey, what should I look at this? When should I buy it? Maybe it's the 4-hour algorithm, because the 4-hour algorithm makes you 675% versus buy and holding at 871%. Maybe it's that. But I will look at it in that one. And Lumentum should benefit as NVIDIA accelerates. This just came out this morning. This is a good one. And FYI, best tech stops to buy on the earnings dip this week. FYI, LITE is one of them. They were up 9% on Friday. They are up 1% this morning. So let's talk about the Dow, because maybe you don't have Seeking Alpha and you just want to look at, some indexes. Well, the Dow hit 50,000 for the first time on Friday. That's a big effing deal. I can remember when my grandfather back in the mid 80s was teaching me about the stock market, and he said, I can't believe this, the Dow is at 1,000. We should be buying the Dow stocks. Well, the Dow has gone through ups, downs, whatever it is. DIA is the symbol of the ETF if you want to follow it. What I did, I was asking AI for the Dow 30 stocks, and I said, hey, give me an idea of what the Dow 30 stocks are. And each AI gave me a different list of Dow stocks. You know what I used to find the Dow stocks? Right up here in Trendspider, if you just go to the index and you look at the Dow 30, it's right there. And you can see today, most of them are red. But the Dow 30 stocks, I set up this one. I created a portfolio in Seeking Alpha so I can track these. And when it hit 50,000, I put the buy-in. Okay? I created a portfolio. I bought one share of each stock. Remember, I used Sidekick. To actually tell me which Dow stocks at the beginning of the year would outperform. I literally asked it. I said, use this trimmed version that stays under Sidekick and blah, 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 blah. And it went in, and I said, which are the stocks that will outperform within the Dow 30? And it gave me 3 of them. It said NVIDIA, JP Morgan, and Goldman Sachs. Well, let's see. Year-to-date performance, what's number 1? It's Caterpillar. Caterpillar's the number 1. Honeywell is number 2. Chevron is number 3. None of those are in the top 5. But if we go to 1 week performance, what's the number 1? 3M, Amgen. What's the best 1 month performance? J&J, Caterpillar, and Coke. So is Sidekick wrong? We're not at the end of the year. Again, momentum profile plus 151. At the end of the year, I'll take this and I'll look. Oh, I asked it for the next 3 months. So we're going to have to look at the 3 months. I know I have a reminder in my notes to actually look at that. But in 1 week, if you go to 1 week and we look at 1 week performance, Verizon is up. I'm sorry. Where's Verizon? Verizon is up 4%. 4% has the lowest PE. If you go and look at the actual valuation, and we look at the PE ratio, PE trailing 12 months, and we look at the cheapest, Verizon is one of the cheapest. Travelers is another cheap one. Disney is another cheap one. JP Morgan, cheap stocks. Merck is up 10%. Walmart, after topping 1 trillion, is up 4%. The worst performers, if you go to the performance, and you go to the, let's go to the 1 month. And we'll go to it's CRM, it's United Health, it's Microsoft, it's Amazon, it's Visa. This is a great list. What other list do I have? I have a list of the top 2026 stocks. If we just go over here and we go to the Video Hub, and we say Video Hub, you can see the top 10 stocks for 2026. Did you buy the dip last week? There were some that were down over 10% last week and are back to even. Did you buy the dip? And if you don't have this list, again, I pointed out for you, you can get it free for 7 days. Just go and get it. over at Seeking Out at Linktree. You can click on any of these links and get Seeking Alpha. So let's look at another one that I want to look at. I love Robinhood. I missed out on the first run of Robinhood. If we go and just look at Robinhood and look at the stock, I was in this one at like 20. I missed out on this one. That legendary run that we saw, I missed out on it. I love that it's back at $80. It's back at $82. I love that one. Amrita did a fantastic job. She's got a hold rating on this one. She did a great job looking at the numbers, and she looks at it specifically. Okay, this is the type of analysis that I want to look at. And then I went in and I said, hey, Robinhood, let's just look at it according to JP Morgan Chase, Goldman Sachs, Morgan Stanley, Citigroup, and Bank of America. Citigroup and Bank of America are just thrown in there. But let's look at it. I love the aggressiveness of the management team. I am holding shares that I bought at $130 in an IRA, $130. So I would have to sell them now if I agree with Amrita's take on this. So let's look at it. The only strong buy in the quant is Bank of America. And all you should really care about is the total return of this one. And if you look over 1 year, Robinhood is up 55%, greatly beating JP Morgan, beating Goldman Sachs. It's the top winner. You go year to date, and Robinhood's the biggest loser. You go 3 years, and Robinhood is a clear winner. Okay? So is it too late to get in? Well, when you look at the quant factors, Robinhood's just expensive. Its growth is unbelievable. Okay? Profitability, it's great. Momentum, it's not good. Again, when you look at the total return at Robinhood, it's down 31% over 1 month, 34% over 3 months, but it's expensive. Doesn't have a dividend. The rest of the banks have a dividend. The valuation, incredibly expensive compared to the rest of the banks. But then you look at the growth. Year over year revenue growth of 74%. None of the banks even come close. Goldman Sachs, which is the closest, is up 13% year over year. Profitability, they are killing it. 92% gross profit margin. Okay, but the performance, that's where you want to look. Look at all the green in the other ones and all the near-term red in this one. So is it a buy the dip scenario? Well, maybe you want to trade it on the 4-hour algorithm, which doesn't have you a buy, but they've got earnings coming up tomorrow. Okay? Now, personally, I believe it's a $100 stock. If you want to buy this at 84 right now, I think it's a $100 stock at some point in time. This is similar to SoFi, where I think it's a $30 stock. The MACD, 9 points below the oscillator. On the weekly, you can see it is totally oversold with the RSI at 36. Now, I point out this little back from the first week in the IPO, this one pumped to $85 and then pulled back to about $6 or $7. Is that where you're going back to? Probably not. Again, the comparison tells me if I want to own one, I think it's Robinhood. For the short-term pops, it's a trade. Long-term, I actually do own Goldman Sachs and Bank of America. Those are the two that I own long-term. Hood is a trade for me. That's my comparison look. Now let's talk about this week, because Catalyst Watch is the best email out there to get you ready for the week. And one of my big holdings, AppLovin. Now, I listened to a Dumb Money podcast last night, and Bloom Energy was one of their things that they talked out to be. And Chris Camillo was saying, hey, when Bloom Energy dipped down to $70 back in December, he goes, I doubled up. I played options. I did everything that I could to buy the dip because the thesis on his didn't change. They still need energy. And this was one of his big ones. He's doubled his money since December. And so Bloom Energy is a great one. It's also, by the way, if you were to go over to your Russell 2000 IWM and look at its top holdings, this is the top stock that they hold. 1% of IWM is Bloom Energy. The second, by the way, is CRDO. So again, know what you own, know what you want to watch, because this is going to be highly volatile. The most overbought stocks that are 14-day relative strength index, TCGL, PKST, you can go and do your research. So what do we have this week? There's a lot of earnings. There's Cloudflare, NET, ALab, Hood, Cisco, Shopify, AppLovin, VRT, which is one that I own that I'm looking forward to earnings on. AMAT, Applied Materials, Arista Networks, ANET, Coin, Pins, Twilio, Rivian, S&P year-to-date winner, mRNA. That is the year-to-date winner on the S&P. Year-to-date, this one's up 39%. They have earnings coming up. You can go and look at their earnings. 213 during market. They're expected to lose money. And yet, year-to-date, they're up 39%. It's a hold. Wall Street thinks that this is worth $38.05 downside. There is a 17% short interest on this one. And the other thing that we get this week is the January jobs report. It was delayed. Okay, it was delayed, and it will come out Wednesday. That's going to be a big mover. And that's this article right here. Top gainers in pre-market include AppLovin, which is up 4%. This is great. I mean, I love that I'm up 4% in the pre-market. But what's moving the markets? Well, 96 of 123 S&P companies post earnings per share growth in the latest earnings week. Earnings is pushing the market. So you want to own companies that have good earnings. How do you find out if a company's got good earnings? You go and use the Quant. The Quant is the power that I like because it's a fundamental stock. Again, you want Monday.com? They just came out with crappy earnings. They're down 24%. It's software. And yet Wall Street says this is a strong buy with a price target 173% over. And look at how they're even chasing this down. So where do you want it? You want something that is rules-based. And that's the valuation, growth, profitability, momentum, and revision of every company that the Quant rates. So let's talk about what another thing that you may want to own. And that may be gold or silver. So let me go over the timeline here. We invade Venezuela. They are one of the leading buyers of Venezuela oil is China. What does China do? They're fighting back in the bond market. They're telling their banks to not buy U.S. treasuries. The bond vigilantes may come out because, again, China holds a lot of U.S. treasuries. Now, can they get rid of them? No, but they can stop buying them. That may, even though you have Warsh in the Fed chair and he wants to lower rates, the bond, you'll hear this a lot, the bond vigilantes may come out. If he lowers rates, the bonds may actually start to go up. The risks are there. This is why you want to hold gold or silver. Safety is not in healthcare anymore. Safety is not in healthcare. If you go and look year to date, healthcare is actually only up 1.88%. It's right in the middle. It's not safety. If you go and look at commodities, year to date, gold is up 14%, oil is up 11%, silver is up 8%. That's where the safety is. So I want to bring this up because remember, risk tolerance, you can't define risk tolerance in one day. But if you felt last week like the world was ending and you shouldn't have lost so much money, flip it around and look at how much you've made, okay? Because this market data page puts it all into perspective. Small caps are up 9.81%, yet the NASDAQ is down 0.76 year to date. Again, you are just 9 days into the second month of the year. If you've invested in alpha picks, you are more than likely up. And I would urge you, if you have a stock, say you have AppLovin, okay, which I do have, go down to the risk profile down at the bottom here and find whatever tool you're using. Find the beta score. 3.63 is an enormous beta score. Okay, that means it's going to trade 3 times the average moving of the S&P, and you can see it in the swings in AppLovin. It is crazy volatile. Okay, so understand what you own. Understand exactly what you own. Risk tolerance, you don't define it in up markets. You may have it laid out in your portfolio. Seeking alpha saves me so much time, so much money. My hourly wage I consider to be about $100 an hour. That means to pay for the year of seeking alpha, 2 hours. Does it save me 2 hours? It probably saves me 2 hours a day in the amount of work that I do. So again, understand what you own, understand the tools that you have. Everything's here on Linktree. If you have any questions, I will be up. Remember, tomorrow office hours will be delayed. I'll kind of post a little bit more about it. I've got a car appointment. I expect it to be done sometime in the morning, and then I'll come back and do the office hours. Okay, take care. See you. Bye. I don't think my mind was all there today. I was all over the place. I didn't like that podcast. I think it had good content, just not very well laid out. So let's see. We're going to take this one and we're going to put that one in here. And we're going to go to my media. We will put this one up here. And I think this is going to, oh no, good. Oh, let me do, oh, let's do that. We'll do the colors. I've had better podcasts.
Good morning. It is Monday, February 9th. I do have to say, we're going to...
Okay. And we'll export. And we'll put this in, copy, export file, save. And then I need to do a thumbnail. We're just going to go into Canva and do a thumbnail. Let's use this one. Oh, I guess this one has the, okay, we're gonna edit and then magic grab. Yeah, there we go. And we'll take that. Oh, no. Okay, let's. Oh. Boy, that's That's disappointing. Edit. Magic eraser. We'll do brush size. We'll go around here. I'm not sure I'm gonna like this one. Maybe I should just start out. Let's see. Erase. No, we're not gonna use this one. Let's go back to home. And we will move to trash. And let's go and maybe this one. Let's get a let's do one. Let's get rid of those. We don't need those up there. Let's see. We'll put SanDisk in there. Oh. We will upload. Let's do where's my image upscaler? There it is. 16 times. Upscale your image. And replace. Then we'll and we'll create rounded corners. And let's see. Uploads. We've got Seeking Alpha in there. Bloom Energy. Western Digital. Seagate. CRDO. This probably needs to be up. Image upscaler. Go back. There we go. And we'll do that. guess I can remove the background as well. Replace. And background. There we go. It's still replacing. There we go. Oh, we'll take that out. And we'll take the background out. Okay. You know what? Let's. There we go. Uploads. Open Door, Coinbase, Robinhood. Hymns, AppLovin, image upscaler. Go back. And we'll upscale that one. Upscaling your image. Replace. Oh, I guess it's done. I guess it's out there in the ethos. Select file. Desktop. There we go. And we're just gonna upload it while I'm doing this. Uploads, Finviz, Weeble, Snowflake, Lily, Micron, Broadcom. I do need. What's Light's official name? Lumentum Holdings. Logo. Images. There we go. Is there a let's see. There we go. We'll just take a screenshot, which is going to be a low res version, which is plenty. Oh, and then I've got to put it in here. And let's do one color for that one. We'll change this all to white. Huh. Whoa. Whoa. No. Undo. We're going to take this. We're going to first background remover. And then we're going to say apply effects. No. Okay. There we go. And we're going to take that. And then take this. And group. Boom. There we go. And share. Download. Download. And then we've got to go to here and episodes. 1011. And what did it say for Spotify? There we go. And we'll take that out. We will put this in. And we'll upload this one. Do promotional content. We're gonna get all of this. Then go over to YouTube and create, upload videos. There's still a few people in here. Anybody have any questions? I am probably going to get going. Okay, let's see. We are going to go over here. And there we go. Yeah. Okay, we're gonna go over here next. Then we'll wait for this. We'll do that up 3. And we need Trendspider affiliate. Okay, this is the affiliate one. Okay, I'm gonna make it short. I'm out. See you guys. Show exit.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.